Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your host, Sawcruhteez. Today, we're going to be doing something a little bit different, at least for this episode here. It will be a BitMEX tutorial series, which is a 5-part series that I have planned for you guys to walk you through the most basics of any real exchange. In terms of what we'll look at today is just looking at the order book, the depth chart, recent trades, and then some of the whale games that are very prevalent in the crypto markets. And then in upcoming episodes, we'll be going much more in depth in terms of showing you guys how to short and how to enter stop losses, how to determine contract value, looking at the contract expiration dates, as well as how to calculate leverage and distinguishing between cross and isolated leverage, and finally wrapping it up with futures, hedging, and arbitrage. So like I said, I plan for this to be a 5-part series, with each part very short, 15 to 30 minutes or so, so that if you guys don't need to an overview about how to look at the order book and the depth chart, then you can just skip right ahead to future episodes, which may be more pertinent to what you are trying to learn. So with that being said, let's go ahead and take a look at the BitMEX testnet. And that's what we've got right here. I did the testnet is separate from the regular network. So if you do have an account set up with the real exchange where you can buy and sell for real money, you do need a separate account for the testnet, and that is what I have set up here. You do notice that it is linked to my sawcruhteez@gmail.com. I wouldn't be doing that if this was a real money account. One of the reasons that I like BitMEX the most is because of its anonymous nature. And if I'm out, making a name for myself as Sawcruhteez, then I'm not really going to want to use that alias for an exchange that I'm trying to be anonymous on. There may be multiple reasons why somebody may want to remain anonymous. The first thing that is coming to mind, I have gotten a bunch of messages before releasing this series. When I mentioned that I was going to be putting it together, a lot of people were concerned about me potentially accessing the site from a restricted jurisdiction, and that is something that I will not really comment on myself. Nobody knows where I live. I have mentioned locations in the past, but never said that I was a full-time resident there. May have just been on vacation. So for me, I may have my own reasons to want to stay anonymous. You may have your own reasons to want to stay anonymous, but that's one of the great things about BitMEX is that I only need an email address to register. And if something were to happen and they close down my account, which has happened to me before, they gave me a week to withdraw my funds, and I was able to immediately reopen an account using a different email address. All they require is an email address to get registered. And the concern that I had is, if I get my account shut down, are they going to confiscate my funds? That hasn't happened yet. I'm not saying that that won't happen in the future, and I want to make it clear that I'm not recommending BitMEX to anyone. I am just covering the reasons why I use it, and I will also be providing an affiliate link just in case you decide on your own volition that you want to use it and you also want to support my channel here. Then you can use that affiliate link to go ahead and register to BitMEX. I would not affiliate for an exchange that I didn't feel very comfortable using myself. So take that for what it's worth. I am not suggesting that anybody else sign up to BitMEX, but if you do, definitely do not put down more money than you can afford to lose. And if they do change policies where they start closing down accounts without issuing refunds, well, you should be okay if you're not going to deposit more money than you can afford to lose. So that is, for me, the main risks and main reasons why I may not want to link my BitMEX account to my real world identity or even my YouTube identity because of the how much I value staying anonymous for one reason or another. And in my situation, there are multiple reasons why I value staying anonymous. So with all that being said, let's go ahead and take a look at the first introduction to BitMEX. If you pull up your BitMEX account for the first time, there's a lot going on here. And it's going to be pretty intimidating, especially if you're relatively new to trading on exchanges in general. Then this will be very intimidating. There's a lot going on, but there's a good reason for every part of it. And before this series is over, I intend to demystify every part of the BitMEX platform and make it it is very user-friendly, but I just want to make it so that people who are new have a little bit easier time learning the ins and the outs, because there are some things that are very, very complicated. And that's what the object will be today. So first of all, we're just going to look at the most basic stuff for people that have never really had much experience on an exchange before, just looking at what is this order book, what is this recent trades, and what is this depth chart. It's very basic stuff, but it is very, very important. And first thing that we want to pay close attention to is the amount of the size of the orders at each price. Notice how there's currently 227,692 at 10,188, but there's only 679 right below that. So if somebody came in with a $250,000 sell order, they would be wiping out all of these orders to try to get to that 250 total for their sell orders. So that's the number one reason why you want to refer to the order book, is if you are going to be buying or selling at market, then this order book tells you how many Bitcoin or contracts are available to sell. So first thing that may jump out at you is, wow, 100,000, is that 100,000 Bitcoin? That would sure be a whole heck of a lot. So that is something that we will get into later, but right now you can just refer to right here and see contract value is 1 USD. So this is actually $100,000 worth of Bitcoin, not 100,000 Bitcoin. So if I was coming in here and I wanted to buy $100,000 worth of Bitcoin, what I would be checking is to see if there's that much for sale. Because if there isn't, that is when slippage occurs. When you see the price at a current amount, but not enough liquidity to cover the orders that come in, that is where slippage occurs. And slippage is essentially when you get a worse price than what is quoted. Right now, we're getting quoted $10,185.5, but there's only up to $100,000 available there. If we wanted $1 million to buy, and we clicked market buy, well, it would go all the way up this order book until it was able to fulfill that order. So we can go ahead and blow it up and see that it would take a long time to fill a $1 million order. You would get a much, much worse price than is currently being quoted. Down here is 10,235, and you'd only be filling 578,000 of your order. You'd only fill about half of your order, and you'd wipe out the book all the way down to 10,235 when the current price is 10,185. That is what a lot of people will refer to as a fat finger. Somebody who just comes in here and fat fingers $1 million. We're going to just buy at market $1 million worth and not really even check, how much is available for sale, and then they wipe out this whole market, and it only happens on one exchange and doesn't really happen anywhere else. That's what a lot of people will consider a fat finger. So just a little bit of information there. That's why this order book is so important, is we need to know how much is available, how much liquidity is available on the books at any given moment right before we're ready to execute a trade. And the depth chart is just a different way to visualize that. So this is showing us the same thing, but in a bit of a visualized chart. I'm not sure what kind of chart this would be, but you see that basically the liquidity is shown here. So we see that this y-axis shows 50K right here, up 350K at the top. So it shows very little liquidity on the buy side, very little demand to buy right here. Compared to how much supply there is, we see a lot of orders to sell, all the way up to the 380K to sell, only $7 away from the current price. Whereas if you go $7 away from the price on this side, there's only 50,000 to buy. So what is that? Maybe an 7.5 to 1 ratio of demand versus supply. And this is where the whale games comes in, because it's very easy to game this chart. If you're a whale and you've got millions of dollars and you really have enough in your account to make a significant impact on how much liquidity is available, then you have the power to really bluff some people. In terms of, if you have a number, if you're wanting to buy and you've got all these limit orders to buy all the way down and you're hoping to scare someone into selling into you, okay? What you would do is put a huge sell order up here that's pretty far away from the price that you don't really think is going to get filled, because there's still a lot down in here and you've got a lot of time that you can cancel that order. And that's what you will see, especially on the real money exchange, is these orders constantly showing up and getting canceled, constantly showing up and getting canceled. And there's a very important reason behind that, and that is essentially that the whales are trying to trick you into selling into their orders, or buying when they're trying to sell. So if you see something like this, what I'm inclined to think is that there is a whale who is wanting to buy, and in order for him to increase the amount of sellers, he's going to try to freak people out by putting a huge amount of orders for sale up here. And then if it gets through just the first couple right here, he's just going to cancel it and it'll be gone, so it won't get filled. And that is how I kind of think about this. It's not always the case, but I'm always thinking like a poker player in terms of, if this can be gamed, then how are they going to do it? And if there's a huge sell wall and not much buys, well, is that real, or is that just some sort of game that these guys are playing? So that is something that you'll only really, you need a lot of experience of watching this to get a good feel for when these games are being played, because you will start to pick up on, okay, the price just went down, say the price just went down and we're testing support, and now you have this huge sell order come in that's jumping in and off of the books while we're at support, and then as price rallies, you see that order get taken right off. So it takes some experience to get used to what's going on here, and this is maybe a little bit advanced for this 101 introduction, but I do want you guys to just be thinking about, okay, if this is the depth chart and this was what it represents, how can this be gamed by big money traders? That's how I'm always thinking. That's how I want you guys to think. Next thing to look at is this recent trades. I often refer to markets and the bulls versus the bears as a heavyweight title fight. I love boxing. I love MMA. I love hand-to-hand combat. And there's something about trading that really, really makes me feel that there are a lot of similarities in terms of the if somebody has a great couple of rounds and then they get exhausted, well, they're in big trouble no matter how good those last couple of rounds are. And then when you get punched right in the gut and it kind of takes the wind out of you, or maybe you're seeing stars and you're just a little loopy and you don't have your full wits about you, that's very much like when the market moves against you and starts approaching a stop loss and you're getting a gut check. There's a lot of similarities that can be made. And when I watch these recent trades, it's like the only thing I think about is we've got the bears in red trunks and we've got the bulls in green trunks. And now we're going to see who is winning this fight by seeing who is punching either the highest amount of volume or the biggest with the most power. Okay, so there's either going to be somebody that wins by throwing a lot of punches and high volume, not really hitting you too hard, but just keeps coming, keeps coming, keeps coming. Then there's the other guy who is the knockout fighter, and he just needs one hit. And either one can show up here where we get a big whale who's coming in for a big knockout hit, and he just starts market selling the shit out of everything in hopes that he actually wipes out all of this liquidity and tanks the price down because he's been shorting for the last couple weeks or so. There's definitely that situation where you get the one punch knockout power type of trader who comes in and tries, but you live by the sword, you die by the sword. That's not always going to work out in his favor. That's for darn sure. What I like to see more is more organic, is one of these sides winning by volume, winning by consistent orders, kind of like this, like we've got consistent orders that are, small, medium. Every now and again we get some large, but for the most part it's just small and medium sells. And that just doesn't give up. It just keeps on coming, just keeps on coming, just keeps on coming. That's what I want to see. When I'm watching these order books, I'm watching the depth chart, I'm watching the recent trades, and I'm trying to figure out, is this some sort of trap? Is this some sort of whale games? The more volume, like the more different trades, the more different sellers that are coming in for, small and medium orders, the more natural that is, the more natural supply that is. Whereas if it's just, a couple, 1-2 guys coming in trying to save this whole market with their own orders, that's something that I'm going to be definitely watching out for them to get it handed to them. And if they do win, I would only expect it to be for a very short amount of time. So I didn't give you really too much strategy here, and maybe I made it a little confusing going through how I think about things, but I do just, what I want for you is for you to start thinking about it yourself. Consider what's going on when this depth chart gets all screwed up, or when there's people entering and exiting these orders just like as quickly as quicker than you can blink. Even if I kind of confused you a little bit with what I was talking about, think for yourself in terms of what's going on here. Who's doing this? What are they trying to accomplish? How does it make me feel? If I see a huge sell wall come up, how does that make you feel? Does that make you kind of feel a little bit nervous? And if so, is somebody maybe understanding that and doing that to try to benefit their position? So that is pretty much everything that I wanted to cover in this introductory episode. We will be coming right back with a 102, which we're just going to go ahead and start entering orders and seeing exactly how this works. And on down the line, we'll get into much more advanced concepts, even for people that are already fully comfortable and experienced trading on BitMEX. I think the 104 and 105 series will be very valuable for you, because I have my own unique ways of calculating leverage that is very effective, that I've never really seen anybody else talk about. So that's planned for 104. And then in 105, I will be looking at these future contracts and how to take advantage of this spread, and also how to potentially use this spread to identify major tops and major bottoms in markets. That's a strategy I've learned from Ugly Old Goat that I have found to be very, very powerful. It's one of my favorite indicators. So that will be in the episodes to come, and I really appreciate everybody tuning in, providing some feedback. If I left anything out that you guys would like to know more about as I'm posting these videos, please leave comments, and potentially I'll plan on doing a question and answer after I'm getting everything uploaded. So thank you very much, and we will plan on talking to you soon.